I'm here at Money 2020 in Las Vegas. This is the year's flagship fintech event where the biggest names in payments talk about what's next for the industry. And this year, what's on everybody's mind is stablecoins, that subset of cryptocurrencies pegged to the value of a real-world asset, which is now virtually synonymous with the U.S. digital dollar.
I think what's really interesting at this Money 2020 this year is that everybody is talking about fintech. Everybody's diving into the stablecoin industry, stablecoin market. Everybody's focused on integrating finance and technology. It's finally come to this really big place where everybody's getting involved, the big players, the small players.
This is going to be the first year where stablecoins actually settle more than Visa, which is mind-blowing to think about. And I think stablecoins and crypto more broadly have just become much bigger than most people realize. We still see a lot of aha moments when you tell people how big the stablecoin market has gotten, how big crypto has gotten. You tell them 600 million people are already using crypto and their head explodes.
Stripe just announced in the last week that it wants to buy a stablecoin infrastructure company for $1.1 billion, an acquisition that many say is designed to help the $70 billion fintech giant diversify its way of facilitating payments. Right now, Visa and MasterCard dominate. They also charge a per-transaction fee to a payment processor like Stripe. But with stablecoins, transactions can cost less than a penny and happen virtually instantaneously. This crypto payment rail has been gaining momentum and attention from some pretty notable names in the business. Earlier this month, Visa announced VTAP, or the Visa Tokenized Asset Platform, which is making it easier for banks to launch their own stablecoins. Blockchain giant Ripple is launching its own stablecoin, as is BitGo. And even PayPal launched a US dollar-pegged coin called PYUSD over a year ago as legacy players look to tap into this new technology.
Stablecoins are the bridge between the crypto ecosystem and the traditional financial system. And that's why you see the leading fintechs, right? Stripe and PayPal and Visa and others really lean into the use of stablecoins.
The question now is whether the big credit card companies will follow suit with their own rival stablecoins. There's also the question of whether the two dominant players in the ecosystem, Tether's USDT and Circle's USDC, can keep a hold of their lead. Tether currently has a market cap of more than $120 billion and accounts for roughly 70% of the entire market. Just Friday, the Wall Street Journal reported that the DOJ is looking into Tether for possible violations of sanctions and anti-money laundering rules, a story which Tether says is based on pure rank speculation and that it has no knowledge of any such investigations. Now, whether that probe opens up an opportunity for rivals to take share is yet to be seen. So far, Tether has faced regulatory blowback in the past, but nobody has come close to competing with them for the top slot. Now, outside of stablecoins, the other big talker this year at Money 2020 is new use cases for AI in payments. Stripe and NVIDIA unpacked how to use AI to fight fraud and promote growth at the same time. PayPal, Block, and Coinbase all talking about the potential for AI to revolutionize payment rails, with Coinbase Ventures just this past week talking about investing in startups building AI on top of blockchains as a way to decentralize the AI stack. The common theme here is that even in the payments industry, AI is seen as a disruptive force that's doing everything from changing the game for home ownership and mortgage processing to reshaping consumer lending.